Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of October 2nd through October 6th, where we'll try to help you make money trading this fall. We'll talk about how the market typically performs in the fall. We'll talk about sectors and industries that typically perform well in the fall and some of our strategies and for making money trading this fall. So let's get started. Good Saturday morning again, Easy Mike. Thank you for joining us. Glad to see you today. Hope you're doing well. So here's our Google document with our notes for part one of our weekly trading game plan for this week. We keep our notes in publicly accessible Google documents so you can refer back to these notes. We have links to bonus videos, the tools and resources we use for our market analysis, our trading strategies, etc. You can find a direct link to this Google document with these notes in the description box below. And we store all the notes for our weekly trading game plans in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weeks in this Google Drive folder. And you can find a direct link to that Google Drive folder in the description box below. Good morning, the Ricky Khan. Thank you for joining us. Hope you're doing well. So let's look at how the markets ended up this week. I'll flip that over to dark for FinBiz. So we can see on Friday, and actually we'll see in the indices, the markets tried to push up after the PCE data was a little lighter than expected. Markets tried to push up, but then declined into the afternoon and generally ended pretty flat to negative. So again, we saw a little attempt at a rally and then, decline through most of the rest of the day. So we ended up with over 50% decliners, 41% advancers, only 20% above their 50-day moving average, only 20% new highs, 80% new lows, 80% below their 50-day. Got 33% above their 200-day and 66% below their 200 days. So we see, the market started out a little bullish, ended up pretty bearish. See a rotation back into the mega cap techs, and we'll talk about the end of month, end of quarter rebalancing factor as well that I think was part of that flight to safety in the mega cap techs again. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. So we see the news with the government shutdown, impending government shutdown, good probability they're going to shut down for some period of time, and then they'll get it resolved and reopen. We'll just have to see how long that impacts things. In general, I'm not terribly concerned about that. We've talked about the impending government shutdown and what impacts that could have on government contractors, defense contractors, etc. But generally, it doesn't tend to have a major impact on the markets, although it might cause a little bit of fear, additional volatility. We see oil had pushed up, tested 95, bounced off that resistance at 95, bounced down to about 90, support at 90. So right now, oil is range bound between 90 and 95. If it breaks up above 95, then it'll go and test 100. Again, natural gas has been pushing up. It tested about 3 a couple times, got rejected. So again, it's pretty range bound between 250 and 3. If it breaks above 3, then again, it'll trend upward. Gold, we'll see gold, silver got really beaten down with the strengthening dollar. The dollar DXY went up above 106. And we see the foreign currencies declined against that. We see a little bit of a recovery in the euro. We see the decline in the USD to yen. A little bit of a recovery in the pound. We also saw the yields did decline a little bit, but we've seen this resurgence in the yields. So again, the dollar strength, the increasing bond yields has been downward pressure on the stocks. And we see the inversion. It's still curve still inverted, but the depth of the inversion is narrowing. So it is flattening out a bit. There's talks about, the yields getting up above 5%, which again would be comparable for the Fed interest rates. So we'll look at each of the indices for the week and long term. So just a quick note, you'll see this new banner in FinViz, and then I'll dismiss it, but it's kind of nice, a new feature in FinViz. They've added splits, dividends, earnings, and earning estimates on their charts. So we can see now with the SPY, it's showing, when the dividend date was, etc. So again, a nice new feature in FinViz that you can take advantage of, and you can find our link to FinViz in the description box below. So we see again pretty steep decline. We talked about September. We kind of right into September we went into this decline. The markets did try to bounce Thursday a little bit, and then also tried to bounce rally a little bit on Friday, got rejected. So we were seeing some upward attempts to rally, and as we'll see going into the fall, going into October, we expect a reversal here. We can see it didn't quite reach that longer term moving average and is trying to reverse. So we almost see kind of a doji on the weekly. So again, an indecision, attempt to rally, failed, got reversed. But again, looks like, we might have reached the bottom here again, unless this government shutdown fear or something else causes a further downward pressure. Going forward in the fall, into October, we expect a reversal and a trend back upward. Welcome, Alan Krantz. Thank you for joining us. Just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some level of entertainment purposes only. So we look at the Qs for the NASDAQ. Again, once we started into September, we saw that decline. Again, similar doji, looks like a more bullish doji, but again, it attempted to rally Thursday, Friday, got rejected. We see that near-term moving average will probably provide some resistance. So we'll probably get a little more resistance in the technology sector in the NASDAQ. But again, it looks like it's attempting to reverse at this point. Very similar with the Dow. Dow broke down below its 50-week moving average and then recovered. So again, probably get support, sit at that support level for some period. Got a narrow range between the moving averages. So probably more resistance and a tighter range on the Dow. IWM for the Russell. Again, the Russell, really broke down. See kind of a little bit of a bullish doji. Didn't quite go to the previous lows. Again, indecision. Looks like it's trying to reverse. Got beaten down pretty severely. Again, risk off move. September tends to be a down month, as we've been talking about. So we were kind of prepared for all of this. So now we're going to see, we expect a reversal going into the fall. Look at the VIX. Got a little bit of a pop in the VIX. Looks like it tested almost 20, got into the 19s, got rejected. And then on Friday, with the light PCE, we saw a pretty steep decline in the VIX. I think it's down. I think it might even be down below 16 at this point. But got a little bit of a pop, tested 20, failed, and then quickly retraced. So we'll just see if this government shutdown causes enough of a fear to pop the VIX over 20. But again, it hasn't really been holding these pops. I know the fear and greed gauge, it was pointed out that had hit extreme fear, but that really wasn't reflected in the VIX. The VIX never did break above 20. Okay, we'll look at the group sectors, industries, and we'll talk about the end of month, end of quarter sector rotation. Let me grab a really quick drink. Okay, if we look at the sectors for Friday, we see a rebound in real estate. Again, technology tried to make a little bit of a rebound. We see what was the strongest sector, energy, retreated, so probably profit taking. We also saw oil retreat from that 95 back down to 90. So profit taking in energy, utilities, again, severely beaten down, got a little bit of a rebound on Friday. So again, rotation. So we see real estate, utilities were pretty negative for the week, got a little bit of rebound on Friday. Energy, profit taking again. So again, energy was the only green sector for the month. Very strong for the quarter. The weakest sectors again for the month. So for September, technology, utilities, real estate, and for the quarter, real estate, technologies, utilities. So again, we're now into October. We're into the fall. You're going to see money managers, fund managers rebalancing. It looked like there might be some attempt again on Friday to start that. We're now rotation into the weakest sectors from the previous quarter. May get a boost going into the new quarter, looking for, again, increased yield. So again, we've been talking about sector rotation for a long time. Here's a seasonal end of quarter type of sector rotation to watch out for. We've been talking about real estate and utilities for a while, how they tend to decline into October, and then particularly utilities. We'll talk about that in more detail probably tomorrow as well. But again, we see a potential opportunity for a rotation back into real estate in particular. Good morning, Flip of the Shippa. I believe I mentioned Alan Krantz. Thank you both for joining us. Hope you all are doing well. So again, Friday, we see some basic materials, aluminum recovered. It had been beat down. Some pharmaceuticals. So pretty diverse. Some real estate, some REITs bounced a little bit. And the weakest, so profit taking in uranium. If you look at this chart in uranium, you'll see many of the uranium stocks were hitting a resistance trend line pretty much, so profit taking uranium had been very strong, as we'll see for the week and the month. And again, I think that's just profit taking at that resistance level. We see a lot of the negativity is in real estate, the REITs, some energy, some profit taking in energy. Again, though, for the week, we see energy was very strong, coal was strong, oil strong. Again, rebound in aluminum. See some of the worst. Again, REITs, real estate, silver and gold been severely beaten down with the strengthening dollar. So again, another opportunity for a rebound, and we'll see in the futures. It was Friday morning, I believe. Silver and gold tried to make a pop. They kind of failed. So again, another opportunity with further attempts. If the dollar weakens, we could see some nice pops in gold and silver again, as we'll see in the futures in a little bit. So again, for the month, energy, uranium was very strong. Coal, oil, again, the weakest. Real estate, silver and gold, solar. Again, with the end of quarter, the seasonal rebalancing, end of quarter, end of month. Again, we saw coal, uranium very strong, oil very strong. So we might see some further profit taking in the energy sector, at least on the short term. But then, as we'll hear, energy tends to be a strong sector in the fall, so I would expect a recovery after some profit taking. And again, so gold pretty weak, solar pretty weak, real estate. So again, opportunities for sector rotation, increased yield, maybe in these beaten down sectors and industries for the quarter. And again, we'll talk about that in more detail and specific stocks in these areas tomorrow as well. Again, utilities, you see utilities for the quarter very beaten down. And again, we'll talk about some of the reasoning behind that, in our opinion, soon. Check in the comments and we'll jump forward. Okay, let's talk about the economic data we got this week, and then we'll look at the economic data coming up for next week. I'll go over some of my highlights and comments, and then again, we'll look at the overall calendar going forward. Okay, I didn't have a whole lot of notes until Thursday when we got jobless data and PCE data. You see jobless claims continuing coming in lighter than expected. We also see initial came in lighter than expected. So again, unemployment's not going up significantly. The average, is again below the previous. So people are finding jobs. So not a lot of severe layoffs. Again, unemployment's, not really an issue that the Fed needs to worry about. We got producer inflation prices. Core was in line. Prices were stable. Consumer spending went down almost 50% more than what is expected. So all looks like the Fed should be comfortable that their actions are taking a hold, except just very slowly. GDP was as expected. Sales a little light. Again, Friday, got PCE data. It was lighter than expected, so inflation on the front end of the supply chain slowly coming down. So again, all positive from a Fed standpoint, but not significant. So I expect they're still going to probably hike one more time. Personal income pretty stable. And we got the consumer sentiment. It was 1 year inflation a little bit above expectations, 5 year a little bit above expectations. Overall expectations a little weaker, and sentiment pretty much in line. Current conditions improved slightly. So again, markets took this data as positive, tried to make a rally, but that rally, as we saw, kind of failed going into the day. We'll see what other data we had from last week, if I missed anything significant. So we see monthly bill auctions. Rates went up a little bit. Building permits were a little weak. Again, the 10-year went up. And so mortgage rates went up. I think they're in the 7% range. So again, that's going to impact new homes as well as sales of existing homes. So we see new home sales was pretty negative, below expectations. Again, mortgage rates went up, kind of expected. Got FOMC members talking, so some are going to be more hawkish than others, and that will cause some level of volatility. I know I don't know if it was Kashkari or one of them was talking about 2 rate hikes, and the market didn't like hearing that too much. Crude oil stocks actually went up, but again, oil prices continue pretty much to go up between 90 and 95. So there's the mortgage rates went up to 7.4. So mortgage applications dropped. Crude oil inventories again dropped. I think there was a note that this was the lowest level in quite some time, but again, not really impacting the prices significantly. Talked about jobless claims, GDP. Again, GDP is still positive for Q2. So, even if we got a recession, we wouldn't know about it for another 2 quarters, technically. Pending home sales down. Again, to be expected with the higher mortgage rates. and oil rigs went down. So again, fewer oil rigs, fewer total rigs. So again, holding the oil price up. So again, all the indications are, oil's going to stay elevated for some period of time. Look at the economic data for next week. So we've got construction spending, ISM, manufacturing. So some level of importance. Another nice feature in the investing.com calendar, as you can see the implied volatility, essentially the importance or the level of volatility that each of these data points typically causes the market. So you can see which ones are likely to cause more volatility if they don't meet expectations. So you can see ISM, you got a Powell speech at 11 causing volatility. So people will be seeing if he's going to say anything. Relative to rate hikes, future rate hikes, future rate cuts, etc. So a lot of people will be listening for what he says. Tuesday, we've got JOLTS. Again, that'll be important. Wednesday, mortgages, durable goods, some ISM, oil inventories, etc. Again, job cuts, jobless claims. You see they don't attribute a whole lot of implied volatility to those except for initial jobless claims. Now, there's some discussion that with the government shutdown, some of this data might not come out on time, and the research that they do, the input data might get delayed. So we may not get some of this economic data as expected due to the government shutdown. So then we've got, again, jobless data on Friday. So again, people are talking that this data might not come out if the government's been shut down during this period. And so the markets will be flying blind without this unemployment data. But again, if we do get this data, this will be a major factor in, the Fed's rate decision at the end of the month. And we've still got some Fed officials, talking. So look at the earnings calendar for next week. See who's reporting. So not a whole lot. Bed Bath & Beyond pretty much bankrupt. Rite Aid, so some retail, some energy. McCormick, the manufacturing spice company. So pretty light. Constellation Brands, so beverages, also cannabis related. ConAgra, some agriculture. Tilray, again, another cannabis. So we've heard that with the Senate passed the banking bill, got a pop in MJ and MSOS cannabis stocks. So we'll see if that continues. So again, reminder, the next FOMC meeting is at the end of October, beginning of November. So November 1st will be the next Fed interest rate decision. And they'll be watching all this data. So again, all this economic data will cause some level of volatility. People guessing, is the Fed going to hike in November? Are they going to hike in December? Again, y'all have heard my opinion. I think the next 25 basis point hike will probably be here in November. I don't think inflation's going to come down enough for the Fed to be comfortable to just stop. But again, that's my personal opinion. We'll see. Talked about earnings. Now we'll jump over and look at the market screen in Webull. Grab a quick drink and we'll look at the market screen in Webull. Okay, this is the market screen for the online browser version of Webull. You can see advancers and decliners. We had, many more decliners than advancers, but the percent decline was relatively small, quite a few, unchanged. I thought the inflow was interesting. That like last week, we saw stronger inflow in the NYSE than in the NASDAQ, but the NASDAQ was actually positive for most of the day and then just went negative at the very end of the day. So again, an attempt to rally in the NASDAQ and the techs, probably related to the inflow in most of the mega cap techs, the FANGs, and then towards the end of the day, we find probably a sell off of that short rally, and NASDAQ went a negative inflow. Again, you can see the near-term earnings calendar here in the calendar section in Webull. So who's coming up in the very near future, whether it's before market open, after market close. So again, easy way to keep an eye on the near-term upcoming earnings. We'll look at the best performing industries for the week. So again, for the week, coal, oil, energy pretty strong. Electrical parts, semiconductors kind of mixed. Some services, packaging, textiles somewhat positive, investments positive, credit. Little automotive, home building, a little bit of home building, leisure, a recovering leisure. Peloton had some news of a deal with Lululemon. That was got it a pump. Look at the ETFs. So see which way they're pointing for the market. So long China, bear small caps, short the Russell. So again, negative pressure on the Russell, small caps, positive on the NASDAQ, short the Dow. So again, short the Dow. Small caps, mid caps, positive here, or that's short small caps, short mid caps, bear on the S&P, so down on the S&P, up on the VIX. So again, we saw the trend has been up in the VIX, but again, it hasn't really been holding its pops. So right now we've got several that are looking for an uptrend or spike in the VIX. Again, bear on small caps, short the Russell. So again, downward pressure on the Russell. We've got long China, long Europe. So again, China's been a little volatile, up and down. So right now it's up on Europe. We'll see in the futures, Europe and the DAX try to make a little bit of a recovery towards the end of the week as well. Industries, 3D printing, video games, some banking recovery. Industrial's pretty negative. Healthcare, energy negative from Friday. Communication services, again, utilities positive for Friday, but longer term it's been negative. Again, pop and technology, basic materials mixed. So again, we saw that rotation in the groups and sectors and industries. So cyclical, a little positive. Real estate, again, positive. So base metals, commodities, copper, we'll see a little bit of a rebound in copper. Bonds, Asia, 3 to 7s. That's been consistently positive recently. So again, the flattening of the inversion of the yield curve, municipal bonds, recovery in the yuan, Australian dollar, euro, pound, just negative on the Swiss. So we'll see all those also in the futures in FinViz. That's a good historical fact. Walter's sharing 3 of 3 of last government shutdowns were net positive post reopening from shutdown. So that's good to know. Thank you for sharing that, Walter. So here's the futures. So we see, an attempted rally in pretty much all of the indices on Thursday, Friday, and, a rejection towards the end of Friday. So right now, Dow, S&P are pointing down, NASDAQ slightly up. We see both the Dow broke down below its previous low from July, also S&P previous low from, mid-August. So again, pretty downward trend. NASDAQ, again, wicked down below its previous low from mid-August and then bounced. See, Russell really broke down, formed a new low, and then, tried to rally, got rejected. Nikkei's trending down. We see both the Euro stocks and DAX have been severely downtrending with the stronger dollar and the negative pressure from the U.S. markets, and then they both bounced on Thursday, Friday. We saw that pop in the VIX, quick retracement back down. It even, wicked back down below its previous low. So, but then recovered. So we'll see if that 17 gets recaptured. If it's recaptured 18, it makes another run for 20. Again, oil range bound now between 90 and 95. So we saw that quick test to 95, got rejected, back down to 90. Probably get a bounce off 90. Again, natural gas futures, again, tested 3, got rejected, bounced back down to, the 270s or so, or 280s. So we'll probably see some more tests of the 3, and probably it'll take several attempts to break through 3. But again, the seasonal trend is up. We see it's, making higher lows. This hasn't made a higher high back since mid-August, but again, seasonal trend should be up. See how severely gold and silver got beaten down with the strengthening dollar. Again, they tried to rally on Friday. There was a pretty nice pop early on Friday, mostly in silver, but some in gold as well. But they got rejected and ended up negative. So I expect, again, another attempt at rallies in the ETFs. We'll talk about, some of the ETFs you can short-term trade, these pops in gold and silver. We've talked about them before. Same thing with oil, natural gas. I think it has been, and I think it will continue for a short term to be a day trade, short-term trade, scalping opportunity. So if you're nimble, I think there's plenty of opportunities to, play these pops, play long the pops, and then short the rejections and make good money. Again, not our core strategy, but I think there's opportunities there. And we see platinum, again, tried to pop, got rejected. Palladium swung back up, tested its previous high, got rejected. Corn's been pretty flat. I want to talk about wheat a little bit, and we'll talk about this again tomorrow. Is wheat had looked like was bottoming and swinging back up, and then Friday at noon you'll see a significant drop. The USDA grains report came out and said there was a surplus in wheat, and that caused a significant drop in wheat. I think that's an opportunity as well. We're already long wheat using the WEAT ETF, but I think there's a potential opportunity there. I didn't read the grains report, but it looks like they probably also reported a surplus in soybean products because they also took a drop. Corn a little bit, but it didn't break its previous lows. So again, we'll talk about that again tomorrow with that WEAT ETF, but I think that's a potential opportunity for a recovery given the global supply of wheat is relatively tight. We see lumber bounced. Again, treasuries have been, downtrending, tried to make a little bit of a recovery on Friday. But again, a lot of downward pressure on the bonds. And again, the strengthening dollar popped up over 106 and then declined slightly on Friday, back down just below 106. So we see that, really strong uptrend in the dollar. We're going to need the dollar to weaken for the dollar-denominated commodities to recover. But again, when that happens, I think there's a significant opportunity in some of the dollar-denominated commodities on that weakening dollar. So we see all the other foreign currencies, weak until Friday when we had that little slightly weakening dollar. Japanese yen got some support, but generally weak. So pretty much all the foreign currencies were generally weak. So I hope that all helps. Let's talk about our strategies, and then I'll come back to ETFs. Let me grab a quick drink, and again, we'll talk about our strategies for making money trading in the fall. Okay, now that we're in the fall, we want to talk about some of the strategies. How does the market perform historically, typically in the fall? How can we take advantage of those opportunities? So we released this week some very short videos with overviews of how the markets typically perform in the fall and what are typically the best performing market sectors and industries in the fall. So you can listen to those short videos via the links here in the notes and on our BeachBum Trading channel. Again, as we'll discuss, some of the industries to watch in the fall tend to be retail with the holidays, particularly going into Black Friday, Cyber Monday, into the Christmas holiday. So retail, energy typically is strong in the fall. Again, as the weather in the Northern Hemisphere cools off, typically the need for more heating oil, coal, natural gas increases. So typically energy is strong, and also travel and transportation. People typically take trips for the holidays. So those are some of the sectors you'll hear typically perform well in the fall. So we'll keep an eye on those sectors as well. I want to bring up the chart for our monthly chart for performance, historical performance of the markets. So we can see we just got out of September. Typically August, September, as we've been talking, are down months. September is typically the worst month. As we saw, I believe it lived up to its historical trend, and I believe it was the worst month this year. So we're now out of that. So we patiently waited through September. As you'll see, we didn't take a lot of new positions in September. And we're patiently waiting for this recovery that we see in the fall. So we see this nice upswing, October, November, December, tend to perform well. December tends to be the best performing month. So again, we're upswinging into that. Got a nice trend from October to November. So again, the fall tends to be some of the best performing periods, probably the best performing season of the year. So, here was the opportunity to buy anything that you wanted to get your hands on and also play these trends going into the fall. So again, we talked about retail, energy, travel, transportation, um, possible opportunities for a reversal going into the fall. So I hope that all helps. Again, we talked about the end of month, end of quarter repositioning. So, fund managers probably wanted to get certain stocks in their reporting for the end of the quarter, your mega cap techs, maybe, I don't know about the AI ones. But again, they probably wanted to get into certain one, probably some of the energies, so that when their report comes out, it looks good. Now, after we're out of that quarter, they're probably going to be looking to outperform in the upcoming quarter. So I expect, sector rotations possibly into those beaten down sectors we talked about real estate, talked about utilities, although again, utilities have some other headwinds with the high treasury yields as well as money market yields. Utilities tend to be a flight to safety sector, and they're tend to be good dividend paying, very, again, relatively safe dividend payers. But again, with bond yields higher than, 5%, around 5%, money markets 5%, those utilities aren't that great. And we did do a video, and we'll talk about it again tomorrow on what we're looking for for a turnaround in the utility sector. So that's one to be a little bit careful with, given some of the headwinds with rates. So now we'll go to our ETFs and we'll look at the technology components as well. So if anybody in the chat has any particular categories, topics, commodities, etc., that you'd like to look at ETFs, please let us know. I'll bring that up. And then just a reminder, you can get access to this ETF Google Sheet 24/7. If you would like, by joining our Patreon at the All Access or VIP level. As you'll see, as we identified opportunities in the futures, in the ETFs in the market screen, etc., to long or short various topics, commodities, etc., then we go to our ETF spreadsheet to identify those with the best risk-reward profile that we might want to trade. So just a quick note, one that I removed from the ETF Google Sheet was Cow. It's no longer active, so we took that out of the ETF Google Sheet. We talked about defense as being one that might get impacted negatively by the government shutdown, but again, it's pretty significantly higher in support, so I don't see much of an opportunity in that ETF right now. Let's look at the technology sectors. So again, we have a number of screeners you can use. If you have access to this Google Sheet, you can use these screeners at any time. You can see the technology components. We also have others to identify various potential stocks that we might want to add to our watch list. And also for day traders, there's some pre-market and aftermarket screeners as well that might be of benefit to you. So we look at the technology components. I thought this was, again, pretty interesting. The FANGs just broke slightly down below this upwardly trending trend line and then recovered a bit. But we see, they're now, all of these we're seeing in hour and downwardly trending channels, and narrowing channels. So I expect them to kind of oscillate, test the resistance as we see previously, test the support, etc. So we see that in the fangs. Also see it in the semiconductors. Semiconductors tested the downwardly trending support level, bounced off, recovered their long-term moving average. I would expect, a retest of that upward channel trend line, and then again a rejection down. Again, the trends in all the technologies is down. So again, I wouldn't expect, right now, any kind of significant rally. We'll get short-term rallies, and again, there's day trading, short-term scalping opportunities. You can long FANG U, short FANG D, long SOX L, short SOX S. And again, with the NASDAQ, you see it bounced off that support line. Again, I expect it to test the upper trend line. So you can long with TQQQ, short with SQQQ. Biotech's a different story. You see it just significantly broke down. There was some, acquisition news that gave it a little bit of a pop, but again, it's down below its previous bottoms and generally weak. Alan's asking about sugar. Just quickly, if I flip over there, we see, it's elevated, but doesn't look like it's got a whole lot of range. We can look at the cane ETF. So again, once we identify a category, we can find that category in our ETF spreadsheet. So here's the cane ETF. So it's, significantly above. It's very, getting close to its 52-week high. I don't have one to short sugar, but you could short that ETF if it is shortable. Since I'm here, we talked about opportunities. There was, a pop in silver on Friday. So if you wanted to trade, short-term trade that pop, our preferred ETF to long silver is short-term is AGQ. You could short silver. So when it got rejected, you could short using ZSL. Similarly with gold, GDXU is our preferred long. There's several you can use to short. You can see Dust is a bear on miners. DZZ is a double short. Talked about biotech. So again, biotech's, very close to its 52-week low. Again, you could short-term trade these with LabU, LabD, but again, the longer-term trend's pretty negative. Talked about cannabis, POPs, and MJ and MSOS. Talked about the volatility in China. These, yin and yang. I know a number of our BeachBum traders trade these on a short-term basis. Pretty much a daily opportunity, and possibly you can trade both directions. Talked about some of the Europe. I looked at Europe, looked at some of the emerging markets, didn't a little bit above support. So they did pop a little bit towards the end of the week. Talked about FANG D and FANG U to play the FANG stocks. Get natural gas, you can long coal, boil, short with coal, cold, KOLD, gush and drip with oil or UCO and SCO. Again, very short-term trades. Natural gas really hasn't been as volatile as it's been in the past. I think silver is probably one of the more volatile right now. Another one, we talked about the trend in real estate, looking for that turnaround in real estate. So I'm looking at DRN. I believe Easy Mike, some other people watch REM and REC. not as hip on mortgages or residential, but when we see that turnaround in real estate, another opportunity, you see it's a little above its 52-week low, but nice risk reward profile using DRN long. Again, you can short real estate with DRV, but again, you can see it's closer to its high than its low. Talked about retail. If you want to trade retail with ETFs, we've got several. RETL. Clicks is a long on online, short on brick and mortar. Also got ONLN. None of these right now are, really close to support. Don't have a great risk reward profile. But RETLs is pretty good risk reward. It's a 3x leverage. So if you want to trade retail with a ETF, RETL is one you might want to check out. Talked about silver, talked about cane, treasuries again. We've been talking about for several weeks. We've been watching the TLT, looking for a bottom in TLT. And then tomorrow, again, we'll look at the dividend payer version of that, which is TLTW. When you get that swing, you can long-term with TLT. You can short-term, swing with a leveraged ETF using TMF. I know people, Easy Mike, several of our BeachBum traders have been making good money shorting that downward trend in treasuries using TBT. And play the dollar short, short UDN, up UUP. Again, if you want to short-term trade those swings in the dollar. And then one we're going to talk about more detail again tomorrow is UTSL. It's one we're watching, leveraged ETF on utilities. So when we see that bottom and swing back up in utilities, we're watching UTSL for that swing. You see it got a little bit of a pop on Friday, but as we'll see again tomorrow, it's been generally trending down. And then we talked about upward tendency right now in the VIX. So you can long the VIX, UVXY, VXX, short the VIX. Our preferred is SVXY. Again, short-term nimble day trades. The way it's been retracing, if you're nimble, you can make some money with these leveraged ETFs on the VIX. Okay, if anybody else in the chat has any other ETFs you want to look at, other categories. Today I have been watching this yen one as well. But again, the risk reward profile for a swing isn't all that great. But again, we have seen some volatility. We talked about that big drop in wheat. So you can see the risk reward profile on wheat, where again, we're already long WEAT, but it's, made a new bottom after that grains report on Friday. And I think, there's a decent opportunity, even just, 52-week, 5 to 9, you can make almost a factor of 2. So I think that's an opportunity that could be had there. Okay. If anybody else has any other questions, any other topics you want to talk about for a few minutes, we can do that. Otherwise, you can always post your questions in the comments to this video. We also have a free Discord. I'll put the link up in the banner. You can also find a free invite to our Discord in the description box below. Again, free to join. We post this economic news, important economic news as it comes out in the Surf the Markets channel in our Discord. Again, that it's free to join. Everyone has access. We can continue these discussions 24/7 in our Discord. If you have any questions, that's probably the best place to contact us is in our Discord. Just tag us at BeachBum Trading. And all lowercase, no pounds, no numbers. So it looks like I've got several imposters to get rid of after this. And also, We have a Reddit community, a Facebook group, and you can find links to those, links to our invite to our Discord, and links to all our social media sites in the links section on our homepage. Our homepage is beachbumtrading.com, bum without the U. So again, plenty of ways you can get in touch with us and ask questions, comment, carry on discussions 24/7. And we'd also love to hear any of your feedback on how can we improve our weekly trading game plans, any of our videos, tools, our Google Sheets, etc., to add more value to all of our BeachBum traders. So again, we'd love to hear your feedback on what can we do to help you make money trading, help you succeed in your trading career. So please let us know. Again, we hope you'll all come back as well tomorrow, same bat time, 10 a.m. Eastern, for part 2 of our weekly trading game plan, where we'll select our top swing trading stocks to watch, stocks in our bullpen. We'll also look at dividend payers, talk about our options trading strategies. So while we transition into fall, other ways we can make money trading this fall. Again, we'll talk about all that in part 2 tomorrow at 10 a.m. So thank you to everyone that joined us in the live chat today. I appreciate it. And again, we hope we'll see you back tomorrow. Thank you and have a great day.